Pat, the market's clearly jumped on your green shoots comment for the second half of this year. But actually, I want to know what green shoots are. What do they look like to you? Very granular. Where are they? What is it that's giving you that optimism for a rebound, which is quite common in your industry for second half?
Yeah, and overall, hey, I want to start by just saying, thank you to my team for a really solid way to start the year in Q1, a meet, beat, a raise for Q2, and that sets up this view of the green shoots for the rest of the year. And I'll say three things. One is, the second half in our industry is typically stronger than the first half, and we expect that to be the case. Second, a lot of inventory adjustments are occurring in the first half of the year. And particularly, we see those finished in the client, the PC industry. But we're also seeing progress through our networking and data center and cloud business as well. So improving inventory position. And, that's very typical of the industry. You go through a sharp decline, you have inventory, a lot of fixed costs, and then you gradually work through that. So we see that as a second factor. But the third one is an improving product position that improves our market share overall. And that, I think, in particular, our data center business in particular, we've seen Q1 as a turning point where a stronger product line, the market is looking at what we're saying for our process and product and saying, boy, that's a little bit better than we were expecting. So seeing some of those positive green shoots. And maybe finally, at least parts of the world, China clearly is showing some economic strength as well. So hopefully some economic green shoots in the second half as well.
Pat, the turning point idea is really interesting. There's a number of analysts that say Intel has hit its trough, essentially, when they look at margins and top-line growth. Is Intel in its trough, coming out of its trough, to your mind?
Well, we guided Q2 better than Q1, and we expect second half to be stronger than that. So clearly from a top-line growth perspective, but also from a margin perspective, we expect that we're similar margins in Q2, but improving as we go through the year, as we get out of the 30s and back comfortably into the 40s as we go through the year. So an improving position on margins and an improving position then on the bottom line as we go through the year. So clearly, we're seeing that momentum, but I'd also say there's a lot of turbulence, macroeconomic uncertainty. So it also requires a lot of execution and financial discipline, which we demonstrated in Q1. So overall, I think the company is doing what I've asked them to do, to be very thoughtful with how we spend, but execute, execute, execute. Product, process, new areas like Foundry, all of those gaining momentum as we go through the year.
Pat, good morning. It's Guy. Can I just take you back to what you said about the inventory unwind just a moment ago? Has the glut gone, or is there still some work to do there?
Yeah, in the PC industry, we think Q2, we're done. We're back to normal, healthy inventory levels. For other areas of the market like networking and data center cloud, I expect it takes a little bit longer. We dropped faster and earlier in PCs, and we're starting to see that come back. Data center started to drop a bit later. So I think it's probably a quarter longer until we get to that same level of inventory health. But overall, as we go through the year, we believe the industry corrections will largely be completed. Inventories will get to healthy level. Guy, this is a fixed cost, long lead time industry. So when the business drops, you have all these factories and it's very hard to make quick adjustments. But as we go through the year, I think that everything improves across the industry and certainly for our business, as we've indicated in the guide that we've given.
Hey, Pat, 5 nodes in 4 years. You and I like to talk about 5 nodes in 4 years. Actually, my question is how you gauge progress in that respect. And what I want to know, very straightforwardly, is what is the manufacturing cost difference right now for Intel, to your mind, relative for your leading edge manufacturing nodes, relative to what TSMC is able to do out in East Asia? Because you want to benchmark yourself, right? So you're working towards technological leadership, but right now, how do you assess that?
Yeah, and clearly, as we've talked about the 5 nodes, Intel 7, done, fully ramped in production. Intel 4 with our next generation client, Meteor Lake, is very healthy. Wafer starts in the factory, for those. Intel 3, that was the good news that people saw for our data center business. And then 20A and 18A as we get to late 24 and into 25 to get back to leadership. From a cost perspective, we'd say, at Intel 7, we weren't competitive. and we get incrementally more competitive. And by the time we get to the end of that period, we'll say our process structural costs are as good as anybody in the industry. But then we also have some systemic issues that get addressed by the CHIPS Act, because there are some fundamental differences in cost between Asia and the U.S. And that's exactly what ITC, the investment tax credit, the U.S. and EU CHIPS Act are designed to close that gap. So by the 2025 timeframe, we think we have process leadership, a structural cost that's competitive with anybody in the world, and we're really then positioned to compete with anybody, anywhere on our products and process technology.
Pat, I'm so glad you brought up the CHIPS Act, because it's Kaylee coming to you from Washington, where I know you had a real presence, lobbied hard to get that CHIPS Act passed. Now that it has, though, I'm wondering how quickly that actually is filtering down to Intel. Do you have a dollar figure in aid that funding you'll be getting from the U.S. government, and how quickly can you really get it? What is the rollout like?
Yeah, and our proposals are now in front of Commerce. I was just there in D.C. with you, Kaylee, last week, meeting with Commerce as they're reviewing our proposals, and that's getting underway. We're still hopeful that we have the first dollars, maybe even as early as the end of this year, coming against our proposals. We do see this 30 to 40% cost gap with Asia, and that is exactly what Congress aimed the CHIPS Act to fix, is close that cost gap. And between the tax credit and U.S. chips, and similarly for the EU chips, we believe we close that cost gap. And hopefully, we'll see our proposals being, engaged very aggressively. And we're very happy that Commerce is partnering with us to get it done, but executing to finish those as quickly as possible, because we're building factories and we need that support ASAP.
Pat, you say that it's about closing the cost gap with Asia, and yet for the U.S. government, it also is about just being more competitive, specifically with China. So I wonder, as the CEO of this business, how you have to factor in those geopolitical tensions and that competition aspect with China. Do you have to think about potentially approaching that business differently in order to be securing this funding from the U.S. government? Have they messaged anything to you?
Well, clearly this is a period of geopolitical uncertainty. I was just in China 2 weeks ago, a very warm embrace, and the economy there is starting to show some life. We were well engaged by the government, by our customers, and I'll tell you, when I was with my employees, I felt like I was Bono showing up for a U2 concert. I mean, just so excited, to have the leadership back in country. That said, obviously in this period of challenge, one where we're working very carefully with U.S. and we have the bulk of our manufacturing here, even as we engage with the markets there in China very aggressively. It's the largest market for semiconductors. So we really need to do both. We do see uniquely that the business community is a bridge to help, bring balance to that relationship, and one where, I personally, as part of the Chamber of Commerce and some of the efforts there, is really trying to seek the dialogues that are necessary, to bring an overall structure to that relationship. But an important market, one that we're engaged in and optimistic for the future.
Hey, Pat, I'm going to let Guy ask you about artificial intelligence and Sapphire Rapids, because I tend to hog the limelight in that area. So I'll ask you this. 5 nodes, 4 years, 3 through to 2018. What evidence can you give that customers are already engaging with those later generation of nodes? Are there any customers that are committing, even though they might just be testing in the lab, they might not have their hands on the real product right now?
Yeah, 3 quick proof points. One is we announced last quarter a major customer on Intel 3. So that's looking healthy. On the 18A, we announced the partnership with ARM this quarter, around mobile ARM architecture on 18A. So a very well-received announcement. And we're now getting our first test chips for our foundry customers, are popping out, and we're starting to test those in conjunction with those potential foundry partners. And all of those are showing that we're on track to what we said. 5 nodes, 4 years. A very audacious plan, but it's coming to life in front of our eyes, and we're having consistent proof points each quarter. And as I indicated on our earnings call, we have major milestones across Intel 3, 20A, and 18A in Q2. So I expect to have some good updates on our next earnings call on all three of those.